Welcome back to Explain the Charts. Today we're going to be doing a full-blown breakdown of the S&P 500 SPY, taking into account the news and chart data. We'll be looking at the 1-day, 1-hour, and 15-minute charts to see what's going on. First, let's take a look at the current news headlines. We've seen a recent pullback in the stock market, with the S&P 500 posting back-to-back losses for the first time since September. Investors are digesting a recent bond market sell-off and concerns that inflation may be cooling down more slowly than previously anticipated. The 10-year Treasury yield has reached its highest level since July, adding pressure to the stock market. Meanwhile, some sectors like energy, consumer staples, and real estate are performing well, while General Motors, GM, has raised its profit guidance for the third time this year. Overall, the market is feeling uncertain about the future direction of interest rates. The Federal Reserve's policy stance and upcoming earnings reports are key factors to watch. Now, let's turn our attention to the charts. Starting with the one-day chart, we can see a long-term uptrend in SPY, with the price making higher highs and higher lows. However, the recent pullback has brought the price down to a key support level, around the 570 area. This area has acted as support in the past, so it's important to watch how the price reacts to it. If the price breaks below this support level, it could be a sign that the uptrend is losing momentum. But if the price holds above this level, it suggests the uptrend is still intact. Let's zoom in on the 1-hour chart to get a better understanding of the recent price action. We can see a series of lower highs and lower lows, indicating that the price is losing momentum. The 1-hour chart also shows that the price has been trading within a tight range, with support around 575 and resistance around 585. This range suggests that the market is hesitant to make a decisive move in either direction. If the price breaks above the resistance level, it could be a sign that the market is ready to resume its uptrend. However, if the price breaks below the support level, it could signal a further decline. The recent volatility in the market has created a lot of uncertainty, and traders should be cautious about making any major trades. Now, let's look at the 15-minute chart, which gives us a more granular view of the price action. The 15-minute chart shows a lot of back and forth trading, with the price moving quickly up and down. This volatility makes it difficult to identify clear trends, and traders should be extremely cautious when making short-term trades. It's important to note that the 15-minute chart is highly influenced by short-term news events and sentiment, so it can change quickly. Looking back at the 1-hour chart, there's a key price level to watch around 585. This level has been acting as resistance in the past, and if the price breaks above it, it could be a sign that the market is ready to resume its uptrend. However, if the price fails to break above this resistance level, it could be a sign that the market is not yet ready to move higher. It's also important to watch for any signs of reversal on the 1-hour chart. These could be things like a bearish engulfing pattern or a double top. If these patterns form, it could be a sign that the market is ready for a pullback. Now, let's look at the 15-minute chart again. This chart is very volatile, and we need to be very cautious about making any trades based on this time frame alone. We can see that the price has been making a series of lower highs and lower lows. However, it's important to note that the price can move quickly in both directions on this chart. Traders should be looking for clear confirmation signals before making any short-term trades. Overall, the S&P 500 SPY is currently in a state of uncertainty. The recent news events and market volatility have created a lot of noise, making it difficult to identify clear trends. Traders should be cautious about making any major trades until the market provides more clarity. It's important to stay up to date on the latest news and economic data and to keep a close eye on the charts. Remember, patience and discipline are essential for successful trading. As we move forward, let's recap the key price levels and things to watch. On the 1-day chart, the key support level to watch is around 570. A break below this level could signal a further decline in SPY. On the 1-hour chart, the key resistance level to watch is around 585. A break above this level could be a sign that the market is ready to resume its uptrend. On the 15-minute chart, The volatility makes it difficult to identify clear trends, so traders should be very cautious. It's important to watch for any signs of reversal on all time frames, as these could indicate a change in the market's direction. It's important to keep an eye on the news and economic data, as these can have a significant impact on the market. The Federal Reserve's policy stance and upcoming earnings reports are key factors to watch. Overall, the market is still feeling uncertain, and traders should be cautious about making any major trades. Remember, patience and discipline are essential for successful trading. We'll continue to monitor the market closely and provide updates as needed.